All right, so we're going live here, folks. What we're going to talk about is the emotional reaction to corporate buybacks, and I'm going to explain what corporate buybacks are, why they're important, and we're going to discuss the structure of the market and some of the dynamics that go along with this corporate buyback, these corporate buyback programs, and what they mean. First, let me do something that I always forget to do, which is talk about my system, my VIP mentorship system. Effectively, what it does is it educates you on how a lot of these things work in a three-step process. Third step being just to be a member of my newsletter, just to get my bi-weekly newsletter. So we start with the education and the foundation of anyone's financial existence. The foundation for anybody is to build a financial plan. There is no way to know how it is a guide. A financial plan, folks, is so much more than that term financial plan. It is a guiding light in everything that you do. It can even be a guiding light for your investments. So, what do I mean by that? Well, in a financial plan, you basically set some goals and then you create a savings and investment plan that will get you to those goals. So, guess what? If all of the sudden you're blowing out your goals, so you're doing so much better than you should be doing. So, meaning so much better than you should be doing, meaning you set a goal for 50 years old or 40 years old, and here you are 2 years into your plan, you're 28, and it says basically 100% success rate, and you're going to overachieve your goal by 50%. That tells you that either you've saved a lot more money than you had initially put into this plan, or some of your investments are far outperforming expectations. So if you look at those investments and say, hey, what is so outperforming what was expected so much that it's made this financial plan look like I can't fail and I'm going to do 10 times what I planned on, because odds are that particular investment's gone parabolic straight up. As we know, what goes up very rapidly must come down even more rapidly. So that financial plan isn't just some, zippity doo-dah thing you're putting together. It will identify when an asset's gone parabolic on you, it's going straight up. And yeah, hey, we all want our assets to continue to go straight up, but I have news for you. One thing happens to a parabolic asset. That's an asset that price is rising extremely quickly. Even if you feel you can explain it, when prices go straight up, they come straight down. And usually they come straight down faster than they once went straight up. So what I'm saying to you is that financial planning portion is critical. The second piece of my system is right down here in the QR code. For those of you that are on TikTok, you don't see the QR code. You would need to direct message me or comment, do something, get in touch with me, go to prometheaninvesting.com, contact me there, and I can get you the VIP mentorship. What the VIP mentorship does is it takes it a step further. So you have this plan that you've now put together, and now you're going to get a 6-week course in the market dynamics, the market structure, how it moves, and why it moves. Why it moves is really simple. It is emotions. The same reason that humans do everything that they do in their life. Almost everything we do is guided by our emotions. The way that we are able to maintain emotional stability, keep us from kind of allowing our emotions to get the best of us, is through knowledge. It's plain and simple. When you understand why and how something's working, it doesn't tend to get you as emotional. And that's what this course does. We cover the three most important parts, the three critical parts of any part of your financial life. We cover risk management, we cover cash management, and then we cover investment management. Those three parts are equally critical. So when you ask someone, hey, what's the best stock? What's the greatest stock? What should I be investing in now? Remember, you're asking that person a loaded question because you're only asking about 35% of the process. And in fact, it's less than 35% of the process, because the financial plan also comes into play there, which is what, probably 20. So you're asking about 25% of the process, and you're wondering why can't anybody just give me a straight answer? What should I invest in? Well, you're only asking for 25% of the solution. So even if that person's spot on with the 25% of the solution that they give you, and you have no risk management, you have no cash management, and you haven't set up a financial plan, there's no way to succeed. You have a 25% probability of success, even if that person has given you the next best thing that is to be offered. That's what we go through in my VIP mentorship course. Right now, my VIP mentorship course is $997. It is a 6-week course. You get the financial planning for free. Then you also get subscribed to my bi-weekly newsletter, which will let you see through my lens. I will show you exactly what it is that I'm looking at, where I see strength, where I see weakness. You'll understand it because you've gone through the mentorship course. And then I will show you exactly what I do with the 3 portfolios that I run. So the 3 portfolios that I run are buy only or long only, buy and short. So I go long and I go short, betting on the market to go up or betting on the market to go down, making money both ways. And then the other thing I do is I call it the zero risk portfolio or the low risk portfolio, right? It just has a catchy tune, zero risk. There's really no such thing as zero risk, but it's the low risk portfolio. And basically what we're looking to do is we're looking to consistently buy the strength in the market, consistently sell the strength in the market, and that gives us consistent positive returns. Now, I can tell you my returns historically, and then I also have to say historical returns cannot guarantee what future returns are going to be. But I can also tell you that I've been doing this for 25 years. When you buy strength and you sell weakness, and when all you see is weakness, you double up on weakness, and when all you see is strength, you double up on strength, you will have consistent positive returns. The standard deviation, meaning how much it goes up and how much it comes down, is very, very limited because you're controlling risk very tightly. You're doing that through risk management. You're doing that through cash management, and you're doing that through investment management. Now, let's go ahead and move on. If you have questions about my VIP mentorship system, that's what it is. It's a system. This isn't just some course. This is a system that's going to get you from A to Z. You've never invested before, or you haven't invested in a way that you felt satisfied with, you are investing in a manner that is appropriate for you and built for you. I also do one-on-one coaching, which we will build your cash management system, your investment management system, and your risk management system solely based on your personality. In my opinion, that's the best way to do it. Now let's talk about corporate buybacks. That's what we're really talking about. What are corporate buybacks? Corporate buybacks are when corporations are buying their own stock. They go into the open market and they buy some of their own stock back, right? So anybody can do it, okay? I mean, Google, Tesla, NVIDIA. I mean, you name it. Right now, everybody's talking about GameStop and AMC, meme stocks. But they do have the opportunity to go buy their own stock back. So someone would say, well, why would they do that? Why would you go and buy your own stock? Well, if you are one of my students or you are receiving my newsletter because you've been with me for quite a while, what you know is that right now there hasn't been a lot of interest in purchasing stocks at our current level. There hasn't been. In fact, commodities are suffering as well. Commodities probably a little more. I would say there's not any interest in buying them, and there is interest in selling them. I think commodities are holding weakness right now. But listen, you can't take that one piece of information and carry it forward as though it's going to rescue you. But I will tell you that it does appear that commodities have weakness right now. And there doesn't appear to be strength in the market. So if I'm a company, I am my own company and my stock trades at ABC, and I have 1 million shares out there in the market. So I put 1 million shares out there for people to buy. And all of a sudden I buy 500,000 of those shares back. I buy them back at $32. If demand remains constant and supply gets dropped, prices should go up. So where there wasn't demand, now there is. Well, where's the demand coming from? Me, Derek Miller. I am buying my own stock, ABC. But that doesn't change the fact that it's buying. And that won't change the fact that I am pulling supply off the table, which should increase prices. So if I'm buying it at 32 and pulling supply increases prices, if it increases prices to 34 and I sell it back piece by piece into the open market, 34, 35, 36, where did I make money? Well, not only did I make money in whatever it is that I do, whether I sell products or services, I've also made money buying my own stock back, creating an artificial supply issue where demand maintains here. But guess what happens as price rises? Demand rises because the average person is going to respond emotionally to price. When people talk to me about investments, I cannot tell you how often they talk to me about price. And I always say to them, why are you talking to me about price? Do you understand what price is? Price is a tool in which the average person with probably a little less knowledge is manipulated. That's what price is. It's a manipulation tool. If I want to scare you, I drop prices. If I want to excite you, I increase prices. There's many ways that I can do this. And I have friends that help me, right? I have people that I hire. So who brought me to market? What firm or bank brought my stock into the market? So who made me, who took me, a private company, and made me publicly traded? It could be one of many, right? Like there's a lot of people that bring you to market. Most people know Goldman Sachs does a lot of IPO stuff. So maybe Goldman Sachs brought me to market. Well, they have a vested interest in me because they own some of me. So while I would like to lift my stock price, so would they, right? This isn't a matter, by the way, for any of you out there that want to turn this into a conspiracy theory or some conspiracy or some negative thing. It's not. It's the same thing as the guy down the street who sells t-shirts and sweatshirts, or like when you go on vacation and you're on the Strand and they're selling you trinkets and whatever that is. It's the same thing as that guy wanting to sell you that t-shirt for $14 as opposed to $12. Well, how can he do that? If he drives a lot of store traffic, he comes up with a catchy slogan, he gets to charge you more. That's the same thing as the stock market. It's a market. If you imagine the market as almost a farmer's market that you would go to, and you envision yourself walking by these companies and which one should you buy, their goal is to make themselves the most appealing to you. The way you make yourself the most appealing is to show great returns. Now, there are ways that you can do that, such as corporate buybacks, buying back your own stock, decreasing supply, increasing price, to make me, Derek Miller, stop and go, oh, I want to buy that, right? It's like getting that Snickers on the way outside when you're walking down the aisle and you want to grab it. That's what they're trying to do. They want you to want to grab it. They want you to want to buy some. They want you to believe in it. And as long as they want you to believe in it, they're going to do the things necessary to keep that market rising. Now, they do the opposite when they are looking to buy from you. So if I'm walking through the marketplace and all of a sudden I have a thing of apples, the person that wants to buy those apples from me is going to tell me those apples don't look good. They're rotten. They're soft. Oh, those are those apples from Oregon. Those winters are hard on those apples. That's just fear. Now I'm wondering, am I ever going to be able to sell these apples? Oh, no. What am I going to like? Well, okay, fine. What will you give me for them? What will you give me for them? Right there. That's how bear markets happen. That's how recessions turn into depressions, because all of a sudden, I don't think I'm going to get a nickel for my apples. And I need that money. I have a mortgage, right? I'm emotionally attached to my money. I have an emotional attachment because money for most of us is not about the zeros and the decimal points and the commas. Money for most of us is our child's college education, the home in which we live, security for our families, food in the refrigerator. Okay? These are the things that money really, that's what it really means to us. And so when we envision that being stripped from us, we panic. And we panic because we don't know exactly what's going on. So I hope that explained what corporate buybacks are. Just think of it very simply. Think of it as yourself as a business, and you have $1 million Don't even think of that. You have 10 apples in your basket that you want to sell. You go out and you say, I want $1 an apple. And everyone's telling you, look, those apples are worth 80 cents. I don't want them. You have 10 apples worth 80 cents. I don't want them. So what I do is I take 5 of those apples, put them in my backpack where no one can see them. All of a sudden, those 5 apples, well, at 10, they were worth 80 cents. So what are they worth now that there's only half as much? If demand stays constant, they're now worth $1.60. And as I get rid of more and more apples, as I take more apples out of that basket, as I remove one, the fourth apple, well, now there's 4, it should be worth a little more. And so at a certain point, when I get down to 2 or 3 apples, I'll start pulling one apple to replace the apple I took, pull another apple to replace the other apple that I took. That'll keep prices moving forward. And that is how your emotions can be manipulated by something as simple as a corporate buyback, which most people don't know what that is. And just to throw a figure on this, Goldman Sachs is estimating that we're going to have $5.5 billion in buying market flows until June 14th of 2024. What that means to you is probably a lot of corporate buybacks are occurring, right? We're heading into the summer. This is a light season. So if there's $5.5 billion in buying flows until June 14th, I would say that we're heading into a pretty big corporate buyback season. You should have a bias on prices rising, bare minimum. You should have a bias on prices rising. And you can also look at that from another perspective that I'm not going to get into right now, but from a risk management perspective, that makes hedging your portfolio, protecting yourself really, really cheap right now. And the goal of hedging is to hedge when it's cheap. When it's expensive, that means the market's already rolled over. But that right there is part of risk management. What we're talking about right now is investment management. And we're also talking about cash management. But risk management is a separate piece that perhaps I will continue with on tomorrow morning's live. I hope you enjoyed this. Listen, everyone. My name is Derek Miller. If you don't know me by now, that's who I am. And the business I run is called Promethean Investing because I am trying to give back the knowledge to the people. I want to provide you with the knowledge that I think we all should have if we're investing. And most of us are investing, whether it's in crypto, whether it's in commodities, whether it's in currencies, whether it's in stocks, right? And most of us have some exposure to the stock market, whether it's through our retirement fund, our 401k, which is another retirement fund. And we need to understand these things. And in Promethean Investing, I have a process. It's the Promethean process. It's education to implementation. So I educate you so that you can implement these strategies. You can implement my system into having a well-rounded, balanced financial and investment plan, which will help you to control your emotions. Because emotions, everybody, emotions are what get the better of you. Emotions are why you buy things you don't need when you don't need them. They're why you get excited at the car dealership. It's why you get excited about that new house. Why you get excited about that Snickers. I could go on and on. It's why you get excited. And that excitement is actually very dangerous because whether you're a long-term investor, that does some intermediate swing trading, whether you're a long-term investor that does very short-term day trading, the goal is always to get the best deal, whether you're buying a car, a house, a Snickers bar, a stock, a commodity, a bond, a currency, whatever you're buying. So listen, my VIP mentorship course starts in a couple of weeks. It is a 6-week course. You cannot beat it. You will start off with financial planning. You will build your own financial plan. I will walk you through how to do that step by step. We will walk through risk management. We will walk through cash management. Then we will walk through investment management. After we have finished that course, you will begin receiving my bi-weekly newsletter, which will keep you informed and let you see through my lens. What I'm going to teach you and what I'm going to show you is exactly what it is that I see and how I see it. This will further your education. You will also get access to exactly what I'm doing to the 3 portfolios that I run. One is a buy only. So we only look to buy. When things look bad, we stop buying until things look good again. Then my second portfolio is to buy So obviously when prices are riding, and short, which means we're looking to make money as markets fall. The third is what I call the low risk portfolio. We are buying strength, buying things that are going up, and we are selling things that are going down. We're trying to minimize risk and minimize standard deviation. The key to investing, everyone, is not hitting home runs. I promise you, hitting home runs is far more detrimental to your long-term success than hitting singles and doubles. And that is what that portfolio is built for. You hit singles and doubles, you're looking to do 10, 15, 20% a year. I use these numbers because that is, in fact, what it's done over the last 20 to 25 years that I have run it. Historical returns are no guarantee of future returns. I'm not guaranteeing anything. I'm simply telling you that's what it's done before. I've been doing this for 25 years, and I have no reason to believe that that's going to change. That is my VIP mentorship course. My QR code is below here. If this interests you and you are on a social media channel that doesn't see my QR code, please direct message me. Shoot me a comment. Send me a text. Go to my website, prometheaninvesting.com, and contact me through my website. I'll be happy to get in touch with you. And for those of you out there, always remember, we all struggle, and we struggle sometimes each day, sometimes multiple times a day, and sometimes for years on end. The struggle will end, right? It will clear. Mental health is the key. I know everybody, you feel like I can't stop. I can't take a break. I have to accomplish this. I have a mortgage due, and you're right. Let me tell you something. You are right. And I feel the exact same way. Try to do the little things. Do anything you can to clear your head. It will pass, because the truth is, the only thing that will make things better is mental clarity. If you cannot be mentally clear, it is very hard to function in this world in an effective manner. I want to thank you all very much for joining me. From the bottom of my heart, thank you for joining me. I hope this helped you. I hope this helped you understand a bit about why prices can rise and artificially rise based on buying that's not really being done by people. It's being done by the companies that own the companies that are buying their own stock back. Thank you so much. Look out for my next live. Thanks again. And any questions, please shoot me a direct message or leave me a comment. And I'll see you soon.